Okay, so today I'm going to explain a couple of indicators, the benefits of having them on your screen and how to trade them. The first indicator is a multi-time frame moving average. So once you've downloaded the file and put it into your data folder, which is just here, you'd put it into the MQL4 folder and into your indicators, and then it would appear in here, MTF, multi-time frame moving average. We're going to put it onto the screen, just drag it across. Here are the inputs. The moving average time frame we're going to set so that although we're on the 1 hour chart, it's going to display the 1 day 20 period exponential moving average. I'm going to OK that, and here it is. So if you was to jump to the 1 day chart up here, this would be where the moving average sits, but because we're on the 1 hour chart, it displays the moving average from the 1 day chart on here. Now we're going to add another indicator to this little system. The indicator we're going to add is the MACD histogram. We're going to move it and drag it across. Here's the inputs. We're just going to use the default inputs, and we're going to click OK. And here's the MACD. We're going to close this down, and here's the MACD with the multi-time frame moving average. So very simple. These two indicators will be available to download on my website, which will be in the link below in the comments section and the description. So we're just going to very quickly discuss how you might trade this. We're going to scroll back to, let's just say, I don't know, the beginning of December, which started just around here. We're on the Euro USD 1 hour chart. Now the way to trade it would be that here's the 1 day moving average, and you'll notice that price is above the moving average. So what we would do is we would look down here to the MACD histogram, and we want it to be below the zero line. The zero line sits here, and you'll notice that the two MACD lines come under the zero line. What we're looking for now is a crossover, the yellow crossing over the red, and that happens just about there, just here. So we'll put a little arrow pointing upwards about there. That was the crossover. You would put your stop loss just under here, and you would measure how far, so say 450 or 45 pips. So we would look to gain 45 pips, which is roughly about there. Now what you can do is obviously set a trailing stop, so as price comes up and it gets to a certain level, you could move your stop loss from down here to just above where you entered the trade, which would be called a break even, and you would just let price move up. What you would then do is you would look for the pullback where it bounces up, and you would move your stop loss from break even up to here. So you've locked in profit. In this particular case, price kind of continued, but You know, the way to do that is what you can sometimes do is you exit when the yellow line crosses back under the red line, which in this case would be about here. So potentially you could have got just over 100 pips. You'll notice as we go through the trades that definitely doesn't always happen, and that you might lose some trades eventually. But let's continue. So the price is still above the 1 day moving average on the 1 hour chart. So we're looking for another crossover underneath the 0 line for us to buy the market. And that happens over here. You'll notice just here that it crosses over at a rather nasty looking high. Not that one, it was literally this one here. So we'll put a little arrow up under here. That's where we would have bought the market, right up there. Now, again, you can adapt this strategy to your own methods. You'll notice that this is a long way from the daily moving average. It's nearly 200 pips away. But if we stick to our little strategy, we would put our stop loss just under here, which is quite a distance. It's, well, 80 pips. And you'll notice that you never went into profit, and eventually you got stopped out. Annoyingly, before it then moves up higher. But that's the way sometimes it goes. That is a big stop loss. Personally, I wouldn't like it. I mean, the other way you can trade this is where price touches your moving average, and then you look for the crossover. Yeah. That's probably how I would do it, but you would lose a lot of opportunities if that's the way you traded. But you know, you'll notice that price is still above the moving average. We've got a crossover here. We then got another crossover just there. For this example, we're literally going to put a buy at every single opportunity, just to show you. So the crossover roughly happened here. Now you could put a tighter stop loss just there of just 20 pips, and you'd have probably just got tapped out before it went a little bit higher. You would have got 20 pips up there, look. It's a one-to-one strategy, but let's assume you lost. What happens next? Down here, look, you get yet another crossover, just about there. So we'll put an arrow pointing up, just there. That was a crossover. We're going to put a stop loss just under here somewhere. So your stop loss is about 30 pips, and you don't quite make 30 pips profit. If you really stuck to the rules, you would get tapped out and lose. So you'd get a loss and a loss. I don't know if there's a shape with a cross. Don't think there is. So you've had one win and 3 losses. Two of these losses come very close to being winners, but technically you've got 3 losses and 1 win. What happens next? Well, price is still above your moving average, and down here you get another crossover just about there. So we'll put a little arrow pointing up, So this is what you would call backtesting your strategy. You never want to just do a strategy and play with live money on the live markets. Either stick to a demo account or backtest it thoroughly, probably even more so than what I'm doing here. So your stop loss would be down here. That's quite a big stop loss. You're talking 40 pips, but that's reasonable, and you want to make 40 pips at least, so we do that easily here. We get 40 pips about there. Again, when you hit 40 pips, you could easily move your stop loss to break even. Once that you've got a pullback and price continues, you could move your stop loss up to here and you would lock in just 10 pips. But obviously price continues to go up and you could potentially make a lot of money. But if you just, for this example, take your 40 pip profit, because this strategy does give you a lot of trading opportunities. The next one comes right here. So your price is still above the moving average, and then we get a crossover just there. So we'll put a little arrow. It occurs just there. Your stop loss would be below the last low, so you're risking, say, 35 pips, and you want to make 35 pips. Well, we did that easily, just there. Now here's a good example. If you would then move your stop loss to break even, look what would happen. The price comes down, touches you out for no money, but you haven't lost anything either, and then it carries on its merry way. So you would have had a winning trade, but it would have turned into a break even and you wouldn't have made anything. So it swings and roundabouts with how you want to trade, with how you feel happy trading. Here you'd have done maybe similar. Price would have come up here, you'd have set your stop loss to break even, and you'd have been tapped out for zero money, but you wouldn't have lost anything. Here, you might have set it to break even, but again you'd have been tapped out and lost. Here you would have just simply lost. So you could have saved, at least 2 losses, but at the moment we stand at 3 losses and 1, 2, 3 wins. So your losses have been quite small, your wins have been reasonable. We'll just continue until the current date to see what would have occurred. So there's no, price is still above the moving average, there's no crossovers underneath the zero line here, but as we move forward you'll notice that there's a crossover here and price is above the moving average. So your next entrance to the market would have been, I think, around there. No, just there. Just move it up to there. So you'd have entered the market here with a really quite a considerable stop loss of 90 pips. I'm not sure I'd be happy with that. That's a big stop loss. However, you're risking 90 pips to make 90 pips, and in this particular case, well, it got to 445 pips, came back to 0, went back up to 48 pips, came back. It hasn't stopped you out, and you do actually make 90 pips right up there. You can't see it maybe. 90 pips is right up here. So you do make it. Just out of interest, there's a crossover here. So there's another entrance here, but because we're in this trade, we wouldn't have took this one, but this would have been another winner. If you'd have missed this trade, maybe if you'd have been asleep for whatever reason, or at work, you've got another opportunity here where you're risking 45 pips, and you would have made 45 pips. So there's another winner there. We'll put a little arrow here. Where was it? Here, just to say yes, this was a winner as well. Should you have decided to take it, it could be that you've entered here with a reasonable lot size, and then while this is running, you could enter a second time. So you've got two trades running, one at this level and one at this level. Both would have been winners. Again, it depends what your lot sizes are and what your account allows you to do. This here, it crosses over down here, but it's just above the 0 line, so it wouldn't count. The rules you set when you make a strategy of your own, you must stick to. If you start breaking them, then you're going to be regretting it. So this one here, you wouldn't have taken. Price remains above the 1 day moving average, and you get another crossover just here. So we'll mark it with a up arrow. I think it was there. No, it was just there. So that's your entrance. Your stop loss is nice and easy to set. It's just there. You're risking just over 50 pips. It goes right up to 46 pips before coming down. It hasn't stopped you out, and then eventually it hits 50 pips up here. Again, interestingly, you get another crossover just there. So again, if you was at work and you missed it, the initial trade here, you've got another crossover just here. So in this case, you would set your stop loss just there, look. And again, you could have two trades running at the same time. This one is risking 40 pips, which you would have took profit just up here, and then this trade here would have took profit up here somewhere. So two great trades again. Price remains above the 1 day moving average, and you get a crossover just here. So we'll put an arrow just there. No, it was a bit before that, but the same level. So there was your crossover. Your stop loss would have been quite small just there, and look, you can see that you'd have got stopped out, you'd have lost about 35 pips. Down here, look, that was where the crossover was. Oh, it was up there. Do apologise. It was about there. And your stop loss would have been just there, look. But you'd have lost. You'd have lost about 35 pips. Now, if you're going to remain true to this strategy, look, it crosses over down here again. So technically speaking, you would have got another loss just there, and your stop loss would have been there. So you'd have lost another nearly 40 pips. Down here, look, price is still above the moving average, and there's yet another crossover. This time it's just there. So again, your stop loss would be there. Stop loss would be there. You're risking 45 pips. goes up to 35, nearly 40 pips, but then comes back and stops you out. So 3 losses there all in a row, quick succession. You'd be crying there, but you know, you might have missed 1 or 2 of them. But again, it depends if you're going to trade absolutely every single one. You've got 3 losses in a row there, and then price comes below the moving average now. So when a crossover occurs just here, this is not a buy because you are below the 1-day moving average. So you do not take this. Then price moves above the moving average. So you're looking for a crossover underneath the 0 line. This crossover here does not count. So, oh, actually, it does. So just look at this. So price comes below the moving average, and on the candle, on the 1-hour candle, as it closes, it falls below the moving average, and then we're looking for a crossover above the 0 line, and that actually does occur there. So what we're going to do is we're going to put a down arrow right there, and your stop loss is easy to spot. It's right there. So you're risking 45 pips, and you're going to make 45 pips easily, just there. So that's your first sell trade, because price was below the moving average, the 1-day moving average, and there was a crossover above the 0 line, so you sell. Perfect. Lovely, lovely trade. So price remains below the 1-day moving average, so you're looking at a crossover above the 0 line. None of this matters down here. The next crossover occurs just about there. So we're going to put a down arrow. Where was it? Was it there? No. It was just there. That's where you would have sold. You'd have put your stop loss around there, and you can see what happens. You lose. You've lost about 25 pips, and then of course price turns around and you would have made it, but that's a small loss. And price remains below until here. Now again, interestingly, price is above the moving average, so you're looking for a buy, even though there's a crossover, a sell crossover there. The crossover occurs there, so this is not a buy trade and it's not a sell trade, so you just ignore it. If it remains above the moving average, then the crossover has to occur underneath the 0 line. If it's below the moving average, the crossover has to occur above the 0 line. So price is below, a crossover occurs just there, just here, look, but price is above the moving average. It would have been a great trade, but you didn't take it because it doesn't meet your rules, so you do not enter. Now price is below the moving average again, so you're looking for a crossover above the 0 line. That happens just there. So we're going to put a little down arrow. I think it was there, yeah. Your stop loss is easy to spot because it's there. Unfortunately, you're risking 40 pips and you just get tapped out and the market goes your way. Very, very, very frustrating when that happens. But don't worry, because there's another opportunity here, look. There's a crossover right there. So we're going to put a down arrow right there. Your stop loss is easy. It's up here. You're risking 45 pips and you easily make it. You get it down here. So that's a nice trade. Price remains below the 1 day moving average, so you're looking at a crossover above the 0 line. None of this matters, you're not even interested. And then eventually there's a crossover here. And you can see what's going to happen. It's not going to be a good one, unfortunately. Happens just there. Your stop loss would be here. You're risking 30 pips. It only goes 16 pips in your favour and then stops you out. But that's not a bad thing, because look what the price did. It just kept on going. You'd have been losing so much money without a stop loss. So price does actually cross back over here. If we're going to be looking at every single opportunity, it crosses over just about there, with a stop loss just above here, and again you get stopped out. You only lose 20 pips, but you do lose. The next crossover occurs just there, but price is above the 1 day moving average, so you don't sell. You're looking for the MACD to cross below the 0 line. That happens here, and yes, price is above the moving average, so we'll put up arrow just, where was that? Just there. So that's your buy signal. The stop loss is easy to spot. You're risking quite a bit here. 45 pips. Do you get 45 pips? Just about, yes, right at the top there, look, before price reverses on you. So you got your profit, and that's a really good win. Barely goes into negative at all. You're looking for a crossover below the 0 line because price is above the 1 day moving average. That doesn't happen, and price drops below the moving average. So now you're looking for a crossover above the 0 line. When that happens, price is above the moving average, so you don't take it. You're now looking at a crossover below the 0 line. That doesn't happen until here. So just there, literally there. So we're going to put an up arrow right there. That's the crossover. The stop loss is easy to spot, it's right there. We can measure how far we need. This is quite a big risk. 63 pips. Do we get it? Do we get it? Oh yes, we do. We get it around there. That is a great win. That is a great win. So we're happy with that. And price remains above the 1 day moving average. Want to cross over below. That doesn't happen until here, and by then price has moved below the moving average. So this is literally now the current state of affairs on the Euro USD 1 hour chart. Price is below the 1 day moving average, and we will be looking for a crossover above the 0 line on the MACD. So at the moment we'll just be sitting on our hands. If we go back, we can see how many wins we got since the start of December and how many losses we made. We can even add up how many pips we lost and how many pips we won. So here was a win, we made 45 pips. Here was a load of losses. We had a horrible loss there. In fact, actually, looking at it, you wouldn't have made these two trades because you was in this trade. So actually, I mean, the only way you would have took these two trades is if you missed this one, in which case you would have took that one. Or if you missed both of these, you'd have took that one. So you wouldn't technically have had 3 losses. If you entered in this one, look, your trade is still live because your stop loss is down here. So you wouldn't have took these two, but you would have got stopped out on either of these 3 trades. But really, we can only count this as one trade. So 1 win and 1 loss, 2 wins and 1 loss, 3 wins and 1 loss. I don't know if this was a win. Yes, it was, yeah. 4 wins and 1 loss. And again, if you didn't take this trade, you'd have took that one. We'll only count it as 1. We'll only count it as 1 win. Because this here is 90 pips. And you didn't get 90 pips until right over here somewhere. So we'll count this as 1. So 5 wins and 1 loss. Again, this one you'd have took one or the other. So let's just count this as 1 win, not 2. They were both winners, but this one didn't win. Oh, actually, this one won. Oh, not quite. Didn't quite win. So we'll count it as just 1 win. So 6 wins and 1 loss. Here, you'd have got. You'd have possibly got tapped out there. If you didn't, you'd have got tapped out there. We'll have to count this as 3 losses. It might be that you missed some of them, but we'll count it as 3. So we're 6 wins and 1 loss, but now we've got 6 wins and 4 losses. Here is a good win, so we've got 7 wins and 4 losses. Here is a loss, so 7 wins and 5 losses. Here, I think this was a loss, 7 wins and 6 losses. But here was a win, so 8 wins and 6 losses. This was a loss, and this was a loss. So I think we're 8 all. That was a win, so we're 9-8. This was a win, so we're 10-8. So on the surface, it's a very poor win rate, 10 wins and 8 losses. But what you have to analyse is how many pips you lost and how many pips you made. So if we pause the video, I'll do the calculations and come back and let you know. Okay, so I've done some mathematics. With the 10 wins and 8 losses, you still made profit. You actually made 220 pips profit. Now that is quite incredible, considering that was over 3 months. Now, yes, you've made a few losses, but you've overall made a healthy profit of over 220 pips. It just makes the difference. You've got an edge. When you have a trading system, you know what you're going to do. You have a plan. Without a plan, I can tell you categorically that trading will take your money. If you have a plan, if you make a plan and you back test it, either on a demo or the way that I've been back testing it here, you stand a chance. You stand a chance. But without a plan, you literally will lose your money. It's as simple as that. So over the period of 3 months, you took 18 trades and you made 220 pip profits. Now that's reasonable. That means that your trading account will grow, and ultimately that's what you want. You have to remember that 95% of Forex traders lose money. 95%. So with a plan like this, it's only a very simple one, but with a plan like this, you could be part of just 5% of all traders who actually make money and succeed. Depending on the size of your trading account, will depend on what 220 pips will mean in monetary terms. So if you have a very small account, you know, like £1,000, your lot sizes will be quite small, and 220 pips might be just, I don't know, £200. But if you could imagine having a £10,000 account, then you'd have made a couple of £1,000. And over a period of time, if you're consistent in your trading strategy and you don't deviate from it, you know, a £1,000 account can become a 2,000 and then a 4,000, you know, or a £10,000 account can become a £50,000 account in a very relatively small period of time. But you are talking a couple of years. I don't care what size account you've got. This is not a get-rich-quick scheme. This takes work and effort. And if you think it's, you know, you see these videos of people lying by swimming pools and driving Lamborghinis. I'm not saying that can't happen. I'm not, because it could happen. But it takes time and effort on your part. And you've seen that in this short video, the amount of time I've spent back testing and doing the figures, and you know, you're not going to be an overnight success. This, like any job, and that's how you've got to view it, takes time and effort. But believe me, it can be done. So these two simple indicators will be available on my website. I'll put a link below and you can go there. One of the indicators will be free. The other indicator will be available on my website, but you will have to subscribe to my website. I charge just £1 a month. You can do it through a PayPal subscription. It's very easy. And for £1 a month, you'll have access to these indicators plus other indicators that I will review and post videos for on YouTube, and you'll be free to download them for just £1 a month. So I think that's reasonable. Subscribing to my website. Of course, you're not forced to do that by any means, but hopefully you've liked this video. So comment below, give it a thumbs up if you liked it. If you didn't like it, then give a thumbs down and tell me so. But I'll be interested to get your feedback, and I hope you've enjoyed the video.